OP Financial Group's operating profit grew clearly from a year ago and totaled at 986 million euros. Our total income grew by 44% and the total expenses by 9% year on year. The loan portfolio and deposits both decreased slightly. The loan portfolio by 1% and the deposits by 4% year on year. Despite weak economic development, high inflation and the rising interest rates, the loan repayment capacity of our customers remained good during the reporting period. Earnings were on a good level in all our three business segments. Growth was especially strong in the retail banking, whose operating profit grew by over 280%, following good development in net interest income. The earnings in the corporate banking and insurance improved clearly from a year ago. OP Financial Group's CET1 ratio continued to be very strong at 18.8%, which exceeds the minimum regulatory requirement by 6.5 percentage points. When we look at the year-on-year change of our P&L items, we see that the OP Financial Group's net interest income grew by over 90%. A significant rise in the market interest rates increased net interest income. Net commissions and fees decreased slightly to 470 million euros. The insurance service result was lower than a year ago. Reinsurance costs increased and the claims expenditure related to medical expenses insurance rose due to the higher claims volumes. The number of large claims decreased year on year. OP Financial Group's investment income developed well and grew by approximately 100% as a result of the increase in the value of shares. Moving on to expenses then. Despite the high inflation, OP Financial Group's costs remained well under control, with a growth rate of 9% from a year earlier. Personnel costs increased by 13% and other operating expenses by 12%. Depreciation and impairment losses decreased by 17% year on year. Impairment losses on receivables in the first half were at the same level as a year ago and total at 99 million euros. Provisions related to the real estate and construction sectors increased. The ratio of impairment loss on receivables to the loan and guarantee portfolio was 19 basis points. OP Financial Group's CET1 ratio continued to be very strong at 18.8%. This exceeds the minimum regulatory requirement by 6.5 percentage points. The ratio was improved by earnings performance. OP's funding position and liquidity is stable and very strong. At the end of the reporting period, our liquidity coverage ratio was 214% and net stable funding ratio was 131%. These ratios are at a strong level. So to summarize, OP Financial Group has a strong capital adequacy and excellent liquidity. Our operations are performing strongly with earnings at 986 million euros in the first half of 2023.